Hello, so last week I talked about the different types of wedge chart patterns. This week I look at another very familiar pattern that is also available as a screen in ChartMill, the triangle pattern. ChartMill recognizes three types of triangle patterns that you can filter on: the ascending triangle pattern, the descending triangle pattern, and the symmetrical triangle formation. In this video I show you what the specific characteristics are for each of these patterns, how to set up a number of screens in ChartMill to search for them, and finally, by means of a number of trade examples, I discuss a number of possible strategies you can use with triangle patterns. My name is Christoph. Welcome to ChartMill. So let's start with the ascending triangle pattern. The pattern is a bullish continuation pattern. It is formed when prices are trapped between a rising trend line and a horizontal resistance line. The trend line and resistance line are forming a triangle. The following things are important when identifying an ascending triangle. There should be a horizontal resistance line which has at least two, but preferably more points where it is touched by price. In the example chart, we see a red resistance zone that is already touched numerous times. There should be a rising or ascending support line which, just like the resistance line, has at least two, but preferably more points where it's touched by price. Ideally, the trend leading up to the pattern was rising. This is why the pattern is called a continuation pattern. A descending triangle chart pattern is a bearish continuation pattern. It is formed when prices are trapped between a descending trend line and a horizontal support line. The trend line and the support line form a triangle, just as is the case with the ascending triangle. Again, for this pattern, the greater the number of times the price hits the resistance or support level, the better. The successive formation of those specific locations at which price rises or falls creates the specific pattern. A symmetrical triangle represents a period of consolidation that may forecast either continuation of the existing trend or a trend reversal. In other words, it may represent a breakout or a breakdown. A breakdown from the lower trend line marks the start of a new bearish trend, whereas a breakout from the upper trend line indicates the start of a new bullish trend. A symmetrical triangle pattern consists of two converging trend lines, connecting a series of consecutive highs and lows. Both trend lines should have a more or less equal slope. I always start with some general basic filters, which I select under the General tab on the stock screener page. In this example, I only set a minimum price and a minimum volume. This immediately reduces the number of eligible stocks to approximately 3,400. To define a specific triangle pattern, select the Chart Patterns filter on the Indicators tab and open the drop-down menu. In this case, I pick the descending triangle pattern. Again, the number of results changes, as you can clearly observe in the left side of the blue bar. To see the triangle patterns as an overlay on the chart, select the Main Chart tab and add Support and Resistance lines as an overlay. The support, resistance and trend lines will then be drawn automatically by ChartMill. Granted, they can look a bit messy, but remember this is just a tool to quickly identify patterns. Certainly, not all of the retained patterns are perfect, so a manual selection is still necessary to filter out the best candidates. The stocks you want to manually withhold can be added to a watch list. To do this, click on the plus sign and add the selection to an existing watch list, or you can create a new one. And you can do the same for the other two variations of the triangle pattern. Either keep the retained candidates in the same watch list, or create a specific watch list for each triangle pattern. Once you've gone through the various screens, you'll eventually have one or more watch lists that you can start analyzing further to see if there are actually any low risk setups among them that are worthwhile. The power of ChartMill, of course, is that you can use very specific filters in conjunction with the triangle pattern. Let's look at a few of them. For example, let's take all stocks worldwide with the only conditions being a minimum price of $10 and an average minimum daily volume of 300,000. And where ChartMill detects a descending triangle pattern. With these three filters, 83 stocks still qualify. However, if I now select the option via the Performance tab to only withhold stocks that are at less than 5% of their lowest annual price via the Performance tab, then a lot of stocks are excluded. The additional filter ensures that only companies are shown that perform poorly. The selection hardly consists of 17 stocks. If I also limit the selection to only US stocks and exclude all ETFs, I end up with barely 7 stocks. Again, a manual selection is required, but for example BWX Technologies and Hillman Solutions Corporation certainly qualify for the watch list. In WWXT, by the way, there is also an inverse cup and handle pattern visible. Another one, this time with an ascending triangle pattern. The base screen shows 91 stocks, but suppose I want only the stocks that are close to their horizontal resistance line. In ChartMill you can use the support resistance menu for this. Open the tab Horizontal Resistance 1 and select the desired maximum distance. I choose current 3% from HR1. The stocks you are now looking at are trading close to their horizontal resistance, and in many cases that is the horizontal line of the ascending triangle pattern. If I now also stipulate the condition that the price must quote at less than 5% of the highest annual price, we are left with 20 stocks and, as you can see, there are some really nice setups among them that are ready to break out. But wait, I'll go a little further. Suppose that from this limited selection of stocks, we want to retain only those stocks for which at least 5 analysts achieved an 80% buy consensus. In ChartMill, you go to the Fundamental menu and under the Analyst Rating tab, put a check mark next to buy consensus bigger than 80% and also next to at least 5 analysts. This leaves you with only 4 stocks that meet all the required criteria. In this way you can continue to fine-tune the selection. If I would further set a condition that the ChartMill fundamental rating must show at least a score of 7 out of 10, then only the McDonald's stock would satisfy all the set filters. To be clear, these results are in no way automatic buy or sell signals. But by using filters, ChartMill succeeds in showing you only the stocks that meet your selection criteria. And based on this selection and further analysis by yourself, you can then decide which stocks have the most potential to be traded technically and or fundamentally. One last feature that is definitely worthwhile and that I want you to show briefly is the earnings and dividend date filter. With this filter, you can quickly check whether, for example, in the course of the next few days, weeks or months, quarterly results will be announced. Very useful to avoid unpleasant surprises. So finding setups using triangle patterns is not that difficult with ChartMill. But when and how do you enter the market? Take a look at this chart from ARLP. Between the last week in April and the first week in June of this year, a very clear bullish triangle pattern with all the typical characteristics has developed. The green horizontal bar at the top of the pattern was tested several times, after which the price retraced each time, forming the ascending lower trend line. An additional observation of this pattern is the lowest sell volume during the intermediate price declines. And another striking detail is a strongly increased buying volume during both periods when the price rebounded up to the resistance level. Especially the price action at the end of the pattern, just before the breakout, was a clear indication that the buyers had the upper hand. The last 2 red candles were consecutive inside days and the selling volume was very low. The second last candle, before the effective breakout occurred, showed strong buying volume. All these elements justify speculating on an upward breakout from the pattern. A buy stop limit order above the existing high was a valid option here. With a stop loss just below the last candle is acceptable, but it is a rather aggressive stop. Just below the last swing low is a more conservative choice. As a matter of fact, after the first entry in this case, there were several possibilities to build up additional positions during the different intermediate price drops. Especially the price drop in mid-July, marked in blue, will have knocked out many swing traders. Waiting until the breakout has actually occurred and placing an entry order only afterwards also remains a valid option, but in this specific case that would mean that one would only buy after the share price has risen almost 50% in only 2 days. Finally, I want to show you this particular setup because it is a nice example of how, after the initial breakout from the rising triangle pattern, resistance eventually becomes support. Around September the 20th, a reversal pattern became visible where one could speculate on a continuation of the existing bullish trend with a short stop loss. So that's it for this week. I hope this video has given you some more insight. On our site there are several articles available on this topic, and I'll put a link to them in the description below this video. If you have any suggestions on specific topics in ChartMill that you would like to see a video on, please feel free to leave a comment in the comment section below. And finally, I would highly appreciate it if you give this video a like and subscribe to this channel. Definitely don't forget to hit the notification bell. That helps tremendously to grow this channel so we can continue to make these videos. Trade safe. See you next time.